You've probably seen the headlines. The feds, they just cut the interest rates again. But here's the question that matters. What does that really mean for you? What does it mean for us? It means that borrowing money might be a little bit cheaper, really, but that's really only half the story because for so many of us, whether it's nonprofits and churches and faith communities, small business owners and everyday leaders, the real issue isn't just about the interest rates. It's about access. For those of us who didn't grow up with access to capital markets or investment portfolios, our capital came through the community, through faith, through hustle. In my neighborhood, we had a daycare provider that we called a babysitter. We had someone who knew how to fix cars, who was the mechanic. We basically had our own community economy, and it was built on trust, reputation, and relationships. So in this moment, it's not just about the rates, it's about readiness. And here's what that looks like. So one, you got to build relationships with the financial institutions, whether you work with a bank, a credit union, or a CDFI. Start the conversation. It's not just about accessing capital. And don't wait until the crisis hits. It's really about relationships. Let them know your story and what opportunities are available to you and your business. You want to know that. Number two, you want to review your investments, your savings, your emergency fund, and what that strategy is. Ask yourself, is your money growing or is it just sitting? And how can you best leverage your funds to support you? Number three, invest in your network. Connect and reconnect with the people who believe in you and what you do, because trust is really still one of the strongest forms of currency. And if you're leading a nonprofit, a church, or a small business, get your team together. Get them together soon and ask, how are we preparing for this opportunity? What's your plan if the economy shifts again? Because guess what? It will. We're living in a very dynamic time. The rate may be low, but your strategy needs to be focused. You need to be intentional because it's not just about what the Fed does. It's about what we do with what we have. And we don't need to be financial experts, but we do need to be informed. Because we don't know, it doesn't mean we can't know. We can learn, but we do need to be relational, strategic, curious, and committed to understanding how things like the Fed rates impact us. We can't afford to worry. Let's keep building, learning, and asking questions. Leverage trust, our assets, create access, and it's about readiness. Think about it. What steps are you taking today? Take care. Peace.